U.S. natural gas futures fell on Monday, marking a decisive turn as bearish fundamentals, long present but largely shrugged off by speculative bulls, finally began to weigh on market sentiment. After failing to sustain momentum above the critical $3.80 resistance level, prices saw a sharp technical pullback, dipping below $3.75 and signaling a shift in tone. The long-anticipated cooling in U.S. weather is now materializing, reducing near-term demand expectations. Despite isolated heat in Texas, the broader forecast calls for milder temperatures across major demand centers, easing pressure on power-driven consumption. This moderation in weather-driven demand, combined with robust production levels and healthy storage inventories, is finally aligning with bearish market narratives that had been overshadowed in recent weeks. Meanwhile, the most significant bearish development is the agreement between the U.S. and China to reduce tariffs to 10%, which was followed by a rise in WTI crude oil futures towards $63 per barrel on Monday. It appears that Trump's bluff with China has backfired, forcing him to retreat from his earlier stance. This is a strongly bearish signal for natural gas because higher oil prices are likely to encourage increased associated gas production, which could potentially drive natural gas prices down to the $2.50 level. Technically, the market is now eyeing $3.50 as the next key support level. A sustained break below this threshold could open the door to further declines, especially if updated weather models continue to trend cooler and if LNG export demand remains steady but uninspiring. In essence, the market's bullish resilience is now being tested by the weight of fundamentals that point to oversupply and weakening seasonal demand. Unless a new catalyst emerges, such as unexpected heat waves or geopolitical shocks, the recent price action suggests that natural gas may be entering a corrective phase more in line with underlying realities. Please like, subscribe, and comment to support the channel. See you in the next one.